Welcome to another YouTube video showing you how to use options analysis to trade options. This is our login page to options analysis. To find us, go to Google and search for optionsanalysis.com. The search will land you here. This is where you can log in. This is also where you can sign up and use promo codes. On the left side, this is some of the free videos we've already made, and we're adding more, including this one. We also have some help guides that you can download to your Kindle. Today, I'm going to be discussing recent changes and improvements we've made to options analysis in the technical trading area of moving averages. A moving average is accomplished by summing the stock close price for a consecutive number of days, say L, then summing the stock close price for a different consecutive number of days, say S, where S has a shorter number of days than L, the longer number of days. And when you look at the average of the short price versus the average of the long prices, and if the short crosses above the long in this green formula that you see here, you go long, or you're bullish. And when the short drops below the long average in a moving average, you go bearish. The moving average crossover trading technology is very well known. It's actually used by many people to help them make decisions about when to enter and when to exit stocks. And there's some well-known values for the long and short days. One of them that's used in options trading is to use 10 days for the short days and 30 days for the long days. The chart you're looking at here for Coca-Cola, you see that overlaid on top of the candlestick chart for the stock prices, shown here in the green and red candles, are some solid lines, and one of them is the 10-day moving average, the purple one, the one that moves faster, and the other one is the 30-day moving average, the black one, which moves slower. When the purple line moves above the black line, you get a buy signal with this B here that's occurred right here. The stock had a nice uptrend, and eventually the lines crossed going the other direction, and that was the sell signal. Then they crossed back, giving you another buy signal here. The stock moved up some more, and then they crossed over again, giving you a sell signal here. Some of the other items in the chart that you're seeing, the E is when the earnings happen, the D is when a dividend happened, and this circle S is Coca-Cola recently had a 2-for-1 stock split. For long-term stock trading, 200 days and 50 days are the other well-known moving average values that traders often use. And I have a chart here for Qualcomm where there was a buy signal here, then a sell signal there. You typically do not use 250 for trading options, and you're going to be using some kind of shorter term, faster moving 30 to 60 day variational technical moving average trader in the cases we're going to be using. Inside options analysis is a moving average tool. You go to Stock Tools, Rankers, Moving Averages, and let me show you exactly where that is online. Here's our home page if you're a standard options analysis user. And the moving averages would be located under Stock Tools, Rankers. Come over here to Moving Averages and you click on it. This loads our moving average tool. You have a bunch of wizards that you can use. We're primarily going to be bullish in this presentation. So We're going to use the least days since latest bullish moving average crossover. You get to input your short days and long days, and we're going to use the 10-30 days I previously mentioned. You pick a stock list that you want to find when the bullish crossovers have occurred. In this case, I'm using the NASDAQ 100, and you simply click the search button. When you click the search button, you get some output that looks like this. It's ranked by the days since the last crossover occurred. So if it's 0, that means the crossover is occurring today, shown here for Pfizer and Walt Disney. And then McDonald's, the crossover happened 3 days ago. If you want to see the picture of the crossover chart, like I showed before, it shows the buys and sell signals that have happened in the past for a specific moving average. You click on Pick, shown by the arrow right there in this output. Now there are 2 problems with this moving average tool, and the first is if you're going to decide to trade Walt Disney or Pfizer right now, how have they done in the past using moving average crossovers to trade bullish trades? It's not evident at all in this chart. This is only showing that the crossings are happening now, or the crossings just recently happened. Another issue is 1030 the best for trading stocks? What happens if you'd like to trade options? Do the short and long values change? Is there a way to optimize which long and short values to use? Here's an example in that prior chart for American Express. American Express had a trade 6 days ago where there was a crossing. If you clicked on Pick, you get this chart. The B was that crossing that occurred 6 days ago. We see that American Express is responding very well to moving averages. It had a nice buy signal down over here, and the stock moved up and it sold here. Had another buy and sell, which was kind of a break even, and now we're in a buy at the moment. So we have, taking a look at moving averages, we had previously created some new technology to be able to incorporate a technical indicator inside a backtester, inside an option searcher, all happening at the same time. Well, it turns out that backtesting algorithms are pretty fast, and there's a little algorithm trick you can use to make them very fast. So we were able to take a moving average technical indicator and put it inside our darknet technology to create moving average technology. It's online, and it's located here. If you have the standard options analysis, or if you have the darknet options analysis options, you can find this new tool. However, it's not in basic. You would have to get one of these more higher end tools. If you go to Find Trades, Search Tools, they're located right here. Moving average puts, moving average calls, moving average stocks. The bottom chart shows moving average stocks. It's very similar to what you just saw with the finding moving average crossings. You have a stock list you're going to search up. This is the Dow Jones 30. You have the 2 moving average days you're going to be looking at. I've already optimized them, and it turns out that for trading stocks, 1519 seems to give the best performance in terms of mathematical expectation. And all you do is click the search button, and it will show you the buys that are occurring today. If you click both the buy and the sell search buttons, it'll show you everything that's happening. Here's some output where I did use the buy and the sell checkboxes, and I searched the Dow Jones 30. If the trade is still active, For example, there was a Disney crossing that occurred with the 1519 moving average numbers that happened 2 days ago. So if that trade is active, you will get a trade leg for that trade that you can trade right now. For Home Depot, there was a crossing 32 days ago, so it shows that leg. And American Express had a crossing 7 days ago, so it shows that leg. It also happens to show what are the latest profits that are occurring since the trade started on day 0. So for example, Home Depot is doing pretty good. American Express is kind of going sideways, and Disney's already doing well. You would click on this to go to the risk graph for that trade leg if you want to save it and start trading it and start watching it on the home page. Included in here is additional information showing you the backtest performance of a stock to moving averages. The column here, labeled number of trades, for example, shows how many times Home Depot has traded with moving averages. There were 17 times it traded. There were 27 times it traded in total. 17 of those were winners, 10 of those were losses. It averaged about 29 days between the buy and the sell signal. It had a maximum profit of 461 and a max loss of minus 62 amongst those 27 trades, and it has a positive mathematical expectation. Home Depot is responding very well to trading using moving averages. But they don't all do. For example, the mathematical expectation is going down, and when you look at the actual output, you'll see further down in the list that some of the Dow Jones stocks were not doing well with moving averages. So each one does differently. Going back in this trade, looking at MMM, it happens to have a 0 here, which means that the trade finished on the date of that this search was done, which was on September 7th. If we click on Pick in this row, we can see this chart. In this chart, you see where the buy happened at this crossing here, and the sell happened today at this crossing here. These are some of the other buys and sells that happened in the past for MMM. Moving averages do very well when a stock is trending up. If you're using a bullish moving average, for example, MMM trended up in this region right in here, and we had a buy signal at the start of the trend and a sell signal over here. But if a stock moves sideways, these moving averages start to seesaw back and forth, and you get a lot of buys and sells, most of them not doing that well when you're in a sideways motion. Sideways motion is the problem with doing moving averages for these shorter numbers. In addition to using moving averages to try to trade stocks, we looked at also trying to trade calls. Here's an example. That was the moving average call finder. It's been optimized for call trading. Right now it looks like 10 days short and 16 days long gives good performance. The call trading search is actually modified darknet call search technology adapted for moving averages. In the output, if you was to run the search, you get search output that I'm going to show next over here. But you also get a summary report of what happened in the stock list over the time period that you backtested. Moving averages for the Dow Jones 30 does pretty good. 90% of the stocks are profitable over the 3.5 years it was backtested over. Each trade is about 46% profitable. there's a lot of seesawing back and forth in many of these trades, and every once in a while you catch a good trend, and this is where the back test performs very well. And that's why there's a reward to risk ratio of 4-to-1 with the call options trading. That's because on average you pick up all the good trends and collect a decent amount of cash, whereas you don't suffer large losses. It pretty much will get out of the trade early before any of your major losses can happen. But it will pick up on the longer trends. Just like before, if you click both the buy and sell checkboxes, you'll get output for stocks that have closed and output for stocks that are still open. In this particular case, Pfizer has just had a call trade that happened on the September 6th when I ran the searcher for this output for this page. And if you decide you want to trade Pfizer, you would click on this trade leg, and that would open up in the risk graph in October 2012 strike 23 call option with a recommended price of about 1.49. Included in this output is not only how many trades were done, how many were winners, how many were losers, and what the math expectation currently is, which is what the ranking was. You also get these two additional columns called slippage and IV. Slippage shows the bid-ask slippage for the call trade that's being recommended. In other words, it took the ask, it subtracted the bid from the ask, and divided by the stock close and converted that into a percentage. The smaller the percentage, the smaller the slippage, and the better it is to trade this call option. If the stock is closed and does not have an open trade, slippage shows 100. The IV ranking grabs the latest 7 to 149 day implied volatility value for this particular stock, calculates where it's located in the 1-year IV range, and computes that as a percentage, where 0 would be at the bottom of the IV range and 100 would be at the top of the IV range. These numbers are all very much towards the bottom, below 20%, most of them below 10%. We're in a situation we're in now is a time period of very low implied volatility. We are not having to pay a lot of premium to trade call options in the summer and the fall so far of 2012. We've also put together a put tool using moving averages that's been optimized. The put tool uses 11 and 15 days, and all that you do here is you reverse the buys and the sells. So before, where we had a bullish crossover, you would turn that into a sell. And before, where we had a bearish crossover, you would turn that into a buy. So you're buying at the top and selling at the bottom. Well, over the time period that we tested moving averages for puts, the performance is very poor. In fact, in the 30 Dow stocks, there's only one stock, Hewlett-Packard, that has a positive mathematical expectation for moving average put trading. That also happens to be the stock that's performed the worst inside the Dow Jones 30. So if stocks are moving up or moving sideways and are not moving down, moving average puts does not work very well. If times change, if you yourself become bearish and you start looking for put trades, this would be the place to come to find those trades. If you think that the time period we're going to go into is going to be more bearish than the 3.5-year period of bullishness we just left. If you click pick and look at the buys and sell signals, I happen to pick one that shows that there is a lot of back and forth trading motion that occurs when the short and long days start to get near each other. You can see many of the buy and sell signals happening here, but to show you one that was working, there was a put bullish crossing that happened here at the top, and then a put sell signal that happened here at the bottom, where the two arrows are. Those are our three new tools for moving averages, where we took some of the new technology in backtesting, option searching, and trading we put together for Darknet, and replaced the stock indicator from the Darknet indicator to the moving average indicator, and then use those tools to go out and do stock and option trade searching. One interesting question is, could we merge the two technical indicators together, and does that produce a better trader? And the answer is yes, it has produced a better trader. And I'm going to kind of explain, it kind of takes the advantages of both tools and merges them together. First, let's start with moving averages only. First, let me show you where this new tool is located. Now, you have to have Darknet to see this. This is an account that Darknet activated. That new tool is located under Darknet, MA plus Darknet calls, located here. So this is the stock Xerox using moving averages. Turns out we've discovered that a 10-11 moving average system is what works when you merge these two tools together. This is a very fast moving average trader. By itself, there would be a lot of buys and sell signals. This is Darknet by itself. Notice that we picked up on this buy at the bottom over here and the sell that happened over here. But for this particular sequence that happened, we got in too early with the buy signal here. Then we got out over here and really didn't make much of a profit on either of those two signals. But when I merge them together, where first we have to have a Darknet buy, then once we have a Darknet buy, we then have a moving average crossover, which is sort of a confirmation signal to the bullishness that we're looking for. Then we enter the trade. And here's what happened. The bullish signal we had over here, we did not enter the trade until we were definitely at the bottom and things had turned around. We entered here. The sell signals are still Darknet sells, so we got out at the same sell that happened before. But we were suppressed from entering the Darknet buy that happened near the earnings, and instead picked it up later in time and then sold it here. So we're going to be delayed, but we're going to have turn confirmation to enter into the Darknet trades. Something that you see a lot in moving averages. If you do how to improve moving averages, if you go to Google and type those words in, you'll discover they improve it by using a delay system to try to establish the upward trend before actually entering the trade. That's sort of what the combination of moving average and Darknet does. Here's a summary chart kind of showing you, using the gray table output, what is happening inside each of these traders for one stock list over the same time period. So here's the very common 1030 moving average. I'm going to focus here on the percent profitable per stock, 79%. We optimized it to 1519. You can see that we get a better number, 84%. When we move down to calls, the percent profitable per stock drops, but we get a improvement in our rate of return and our reward to risk ratio. Another thing to notice is with the 1030 trader, in terms of total number of trades over the time period we looked at, we get around 1,600, and when the two short and long gets close together, we're trading considerably more, almost double. about 1.5 times. So so the calls with moving average is doing better than the stocks and has pretty decent performance. The puts, of course, are not good. Traded a lot and did not get anywhere for all the action that it did. Now here's darknet stocks, which you compare to the moving average stocks, and we see that on a percentage basis, very close. Where darknet comes in is it trades considerably less, 779 trades to almost 3,000 trades, and has a significantly higher percentage profit per trade. Darknet doesn't get confused by the sideways motion, is what's happening here. It doesn't enter in trades during that time period. It exits and exits during the trends happen. The rate of return and the reward to risk ratio are better than the moving average stock values for darknet stocks. When we switch to darknet calls, about the same performance approximately with the stocks, a lot better performance per trade with the calls, considerably better performance in the rate of return. That's the rate of return of the moving average calls is significantly penalized because there's thousands of trades in here that had a not much happening in the rate of return, and when they all average out, you get the small 4.5 number. For darknet, it concentrated its trades on the good stuff. It gets a significantly higher rate of return because most of its trades that it decided to get into that ended up getting into the trend, got into the trend well. And lastly, we see that when we merge darknet and moving average, we go into all the directions that we want to see. We want to see fewer trades, but we want those trades to be of a higher quality. And the higher quality is what you see happening in the rate of return and in the improvement in the reward to risk ratio. A change we've made is that if you go to your stock charts and look at your controls, so inside the stock chart under the controls section, if you click on show controls, there's moving average days, and if whatever you put there and you click this update green button you see at the top in the stock charts, that's saved, and those are the two numbers we're going to use on the charts that appear on the home page of options analysis. So in summary, we have some new moving average tools. If you have darknet or standard, you can use these new tools. It's not inside basic. You can trade stocks, calls, or puts. Every time you run the tool, you're going to get that day's back-tested performance. We've merged it with the darknet, if you have darknet, and it has, so far has produced a better trader than the one we had before. Thanks for listening.